Jonathan Sandelman, CEO, Ayr Strategies, on the Dales Report.
All right, I am happy to be joined with the President and CEO of Ayr Strategies, Mr. Jonathan Sandelman. How are you, sir?
I'm great today. How are you?
Excellent. Where are you based out of?
New York City.
New York City. How's things been? Obviously, a lot of talk with, I've spoken to quite a few people in New York over the past few months. Interesting times, to say the least, but how's been things through the whole COVID experience for you?
I was out of the city for a number of months, came back after Labor Day, and it exceeded my expectations.
Are you seeing more and more people in the city now?
Seeing more and more people, but New York City without people is a beautiful thing.
Is it? Yeah. Well, I'm sure a lot of people can relate to that when it comes to big city life. Same thing.
No traffic.
Yeah. I was in downtown Toronto last week and I could not believe what I saw. It was like nobody around. So nice for traffic from getting from point A to point B, that's for sure. Well, let's begin. I want to talk to you about, first off, the current landscape of the cannabis industry in the U.S. What do you find has changed from the early days from Cannabis 1.0 to where we are today, which is Cannabis 2.0? And knowing that, like last night, there was a vice president election, there were some interesting things that the Democratic side had to say about decriminalization. So where are we right now? And what can you expect, you think, in the next 3 to 6 months?
So let me just tell you from the beginning, when I started to focus on it, remember, I'm from the finance world for 30 years. I run my own family office. This was meant to be an investment. At first, I wasn't that interested in it because I tend to only invest in my core competency. And I have to admit on this show, weed is not my core competency. It has become my core competency. And any time I spend, or any investment that I spend, 105, 110% of my time is because I think the opportunity is so enormous and that my skill sets give me an edge vis-a-vis the competition.
Interesting.
So where were we? When I got into it, Cannabis 1.0, I agree with you. Like a lot of very bull market, enthusiastic markets, they're highly correlated. Any stock, you could take a machine gun, you could just spray your bullets, they would go up.
Right.
Okay. Right. There wasn't a lot of fundamental research. It was mostly driven by Canadian retail, which is very momentum based. Mm-hmm. And what I said from day one, which differentiated us, which brings my edge, that when I buy my companies and I enter this market, I will be EBITDA and cash flow positive.
Interesting.
I understood the need and the risk management of always being EBITDA and cash flow positive. What did I witness? I witnessed companies trying to build Apple, Microsoft, you name it, in 1 year. They did the land grab. Okay. Those are the people I was competing with in 1.0. What I realized when I bought my first 5 companies, and I had some of the most EBITDA and cash flow from day one, that markets, a little secret here, are cyclical.
Okay, yeah.
They don't always go from the left quadrant to the right quadrant.
Right.
Without a pause.
Right.
Okay. But I knew that. So I bought my 5. I focused on my 5 companies in 2 states, Nevada, Massachusetts.
Yep.
And I built them, improved their operations, developed my SOPs, and built my talent pool.
Interesting.
I then waited because I saw the maximum enthusiasm, the irrational behavior that was going on in 1.
Yeah.
And I said, this will not last. And I'll give you a simple statistic as an investor that I looked at. There were 5 MSOs going into 16 states simultaneously.
Okay.
5 times 16 is 80. You would need 80 extractors. There isn't 80 extractors sitting on the beach. You would need 80 cultivators. There isn't 80 cultivators sitting on the beach. Add another 5 if you're going to have stores in each one of those states. You don't have 400 store managers laying on the beach. So as an investor, these are the signals I look for to either buy or sell a market. I said, I'll pause, I'll develop my business, and when the market corrects, because the market always corrects, that's not something that's very insightful, I will be in a position for 2.0.
Right. More and more people, like the more and more people I'm actually speaking with, it's like once you start to understand their story and realize what has unfolded over the last couple of years, more strategic, more better management's getting involved because they're seeing obviously what the mistakes we're making. But here we are today. How big of an opportunity do we see in this US cannabis landscape going into 2021?
I think it's enormous. And part of the reason I love the industry, when I was doing my research, because again, we spoke about it, wasn't my core competency. So I did a lot of math and relative value because that's what I do, right?
Yep.
So if you go back to 17, if you look at the total market cap of marijuana, it was in Toronto, it was $40 billion.
Right.
Okay. Then I noticed in every state that legalized marijuana, I looked at the liquor sales and the beer sales, and it was trending down.
Right.
Okay. So I looked at the total market cap of liquor, beer, pharmaceuticals, because this is one of the few products I've ever seen that it both is nature's medicine, there's a wellness aspect, and then there, as we say, a wonder.
Right.
And Ayr has always been built to be at the cross section of wellness and wonder. So I knew there was a convergence trade of $1 trillion of market cap to 40 billion,
right,
legalization in Canada at that time. And I knew it would converge. That's why I was in. But in 2.0, I think your question is what happens from here? Mm-hmm. In 2.0, which happens in every 2.0, I've seen it in the internet, I've seen it in cable, I've seen it in every industry. What happens in 2.0? Well, investors lose money because the market does rationalize.
Right.
Market always. I always speak about it. In the short term, we could see irrational behavior by investors. In the long term, the market is rational. It corrects in 2.0. Now there's real value in the market. We get a whole new set of investors. And those investors are not momentum driven. They're fundamentally driven. Okay. Exactly. They apply models to this.
Yeah.
And what have they decided today? They decided who the winners, a handful of them, will be the company to be able to take advantage of this enormous once-in-a-lifetime opportunity.
It's a great way of looking at it.
Ayr is so fortunate because while everyone was grabbing, I was operating. While everyone was building on this momentum capital, there was an enormous assumption that the capital markets would always stay open and cheap capital be available. I would never build a business that way because I know that's not true. Yeah. So what happened now? The new investors have decided there's a handful of winners going forward. And for those winners, they have spoken and they said for them, there's capital. For everyone else that falls out of that pack of the obvious winners going forward, there is no capital. So what I'm excited about is Ayr because we have some of the most free cash flow in the industry with only 2 states. We have some of the most EBITDA with only 2 states. Okay, we have some of the highest profit margins with 2 states. Because we spent the time actually building a business, because I at an interview asked me, John, tell me about the cannabis business, how it's different. Well, if you drop off cannabis, guess what? It's business. Yeah. And I don't need to invent anything. I just need to do what great companies do. So Ayr is fortunate in this Venn diagram to be one of the best operators who has access to capital. But the thing that really gets me excited is not only do we have access to capital, but the other folks that have been anointed with the capital already own the footprint I want to buy.
Right.
So we think about in 2.0, the supply and demand characteristics, the buyers who actually have access to capital, handful,
right.
They already own the footprint I want. I have access to capital and I don't have their footprint.
Right.
So now when I do the acquisitions, some I've already announced, some I will announce, I said on my earnings call, the economics and the returns are so much higher for our shareholders than they were simply 12 months ago.
Well, it's interesting the way you've outlined this, because let's face it, this industry, there was a lot of reckless spending over the past 12 to 18 months. You see a lot of multi-state operators running into money. So what I'm hearing is obviously you guys have been fiscally sound and are poised to obviously take advantage of this opportunity that's at hand now, correct?
Yes.
Yeah. Recently I was online, and according to Yelp and Weed Maps, there's currently less than 10 cannabis dispensaries in the greater Boston area. Your intention is to open up 3 dispensaries there in the next year. So can you tell us more about your plans to tap into that lucrative market and when you believe Ayr will start opening up in Boston?
So let's just talk about a business in Massachusetts.
Okay.
We're the number one wholesaler in the marketplace today.
Okay.
BDS just said this week, the Sierra Natural brand, that's our brand in Massachusetts, is not the single biggest, yes it is, it's the number one brand according to BDS. So very proud of what we built, waiting for our stores to go from medical to recreational.
I also want to talk about, we've looked at research reports by 3 investment banks, and we've noticed a common theme that Ayr Strategy continues to be among the strongest cash flow generators in the sector, as you've outlined. Yet you generally trade at a discount in comparison to some of the other, bigger MSOs like Curaleaf and Cresco Labs, especially when comparing with an EV revenue and EV EBITDA basis. Why do you think that is?
So I had a very strong opinion, as we talked about,
Yep,
on not doing the land grab and focus on EBITDA and free cash flow and top performance as an operator. I saw the irrational behavior.
yep.
After my 5 initial acquisitions, I paused. And the knock on Ayr was, we're just a 2-state operator. Does he want to grow it? Why hasn't he bought? Maybe he's a seller, and all this negativity. Mm-hmm. It wasn't easy personally. I'm a very competitive individual.
Yep.
I've had a successful career, but I just, from a shareholder's perspective, the fiduciary duty that I take seriously, I could not, in good consciousness, enter the fray.
Interesting.
So I paused.
Right.
And I developed our business such that when we felt the day would come, and the day has come, our systems, our operating systems, our financial systems, the talent pool that we have, our teammates, that today, if I go into a new state, we're so well organized that it makes no difference whether I open a store across the street from an existing store or I move into Pennsylvania, which is a state that I announced that we're moving to next, or Ohio, which is a state I've announced that we're moving next. So I paused. Sometimes if you're a man of conviction, you take crap for that.
Yeah.
But I think for me, this has never been about short-term economics. You don't know me. I've never been short-term greedy. I say that, then days I wake up in the middle and I go, I don't even think I'm greedy. Mm-hmm. But I do have a very strong long-term vision of where I think this industry is going. Who will be successful? The proof that we might have been right, and I never feel there's one way to conduct business. But when I look at the other MSOs today, who are in many, many states, if you notice their business plans today, they've all pulled back and are focusing on 2 or 3 states.
Yeah, you're right.
Improving their businesses, increasing the EBITDA and cash flow. And I'm sure with cash flow and EBITDA doing the prudent thing, they will then revisit their expansion plan. So I think it's a confirmation.
The last thing I want to leave, and I want to ask you, I want to ask the question why it makes sense for investors to invest in Ayr Strategies right now. More importantly, too, though, you look at the broad scheme of things, many analysts believe it's time for investors to take a fresh look at this industry, given what happened to the cannabis landscape a couple of years ago. So what do you find it's going to take, in your estimation, to get investors off the sidelines, back into the cannabis space, and potentially into your company, Ayr Strategies?
So we talked about Ayr, the Venn diagram, right? Markets consolidating, new discipline investors, they're anointing who the winners are. The winners, only those winners are having access to substantial capital, right? Ayr is in that group. Ayr did not make its acquisitions, and complete its portfolio. Ayr is doing that now in a market that's way more value oriented than it was simply 12 months ago.
Mm-hmm.
Ayr has some of the most free cash flow, EBITDA, and some of the highest profit margins in the business. And that all trades at 4 times next year's earnings.